back with another video. In today's video, I'm going to be answering a question which is asked by a lot of traders. All right, so what happened was, in our Telegram channel, if you're not part of that, do find the link in the description below. I did give out two free signals last week, and one of them was USD CAD. And the reason why I'm going to focus on this trade breakdown is because one of our subscribers asked the question, and as you can see, they did send me this. This was sent in the Telegram channel, so they just forwarded this so that they can ask the question. And as you can see, where they demarcated right here, or marked rather, the question was, why did I not book profits there, and why did I hold the trade for another level? So this is the reason why I'm making this breakdown video. Okay, so looking at this trade, as you can see, if I can zoom in, this was USD CAD in the H1 time frame, and as you can see, we had a sell entry right at this point. So I'm going to be taking you guys to the charts and breaking it all down for you. Not one of my best entries. I usually want to take my entries right at this point, but I got busy. But we did take advantage of this move, even though it was a bit late. But as I always preach, make sure that you manage your risk at all times. All right, so let's take it. Let me explain levels first, and then we can take it to the chart. All right, guys, so as we all know, the market maker cycle is our blueprint that we use on our strategy. So I'm going to be I always break it down in every video, but I always like refreshing you guys' minds when it comes to this. So market maker cycle, very simple. What we expect to see is some form of manipulation, right? A peak formation, a level of rise, second level of rise, and then the third level of rise. Now this pattern can be seen in any time frame. This can be seen in your 1 minute time frame, and this can also be seen in your monthly time frame. But what's important is understanding the whole idea behind this market maker cycle. So it's very simple. An area of accumulation, a false move in the wrong direction, a peak formation. A peak formation can be defined as a W formation. First pattern of a W formation can be the second leg being lower than the first one. This is a clear hit of the stops. As you can see, it moves below that area. Another variation is when the second leg is higher, but this is when we can use tools like TDI for more confirmation. All right, so this market maker cycle, the reason why I'm explaining this is when we talk about the daily cycle, what will usually happen is, as the dealer, in this case, we're looking to sell. So what you'd expect when you're looking for something like that is you'd expect agent session accumulation, right? A false move in the wrong direction, right? In this case, we're looking for a sell. So I think this would be a better example, right? A false move above the Asian range, and then we'd love to see a peak formation, a move, right? Giving us that 1 day of drop, and that 1 day of drop can also be broken down into 3 intraday levels. So this being 1 day of drop, it can also be seen as small intraday pushes, right? So what will usually happen is, as the dealer then ends the day, because remember, each day has the high of the day or the low of the day, right? Every day, every trading day will have the low and the high of the day. Right, so in this case, since we're looking for sells, what we'd want to see is the dealer giving us a drop, right? And whatever ADR that we have for that day, the dealer will pull back, and we expect him to close the day into a consolidation, right? So that the next market maker can then begin the day and continue with these traps. Now, for some people, this is where some people, get confused when it comes to taking your profits or continue holding a trade. Remember, one thing you shouldn't do is, get married to one time frame, right? You always need to understand what's happening across all time frames, right? So the problem with most people is they'll just stick to the M15 time frame only and not really understand what's happening in your daily, your H4 or your H1, right? So what most people would do here, which is not wrong, right? If they do identify, let's assume you did take the trade near the high of the day, you entered a sell trade, after identifying the accumulation down here and the manipulation around about your Asian open, right? Let's assume you took a trade here. So you taking profit when you see a peak formation the other direction, there is completely nothing wrong with that. depending on the type of trader that you are. If you're an intraday trader, that's completely okay. But you know, if you're a swing trader, there is absolutely no reason for you. You do not have to close the trade. Now, for some people, what they'll say is, but you know, if I hold the trade, most of the times something like this would happen, right? Instead of the market continuing with the downside, instead, this peak formation was actually the reversal, right? That does happen, but the only way that is going to happen is when you do not have a clear picture of the bigger picture, basically, right? Because if you identify this, or if you just focus on the M15, you will not really understand that, okay, this peak formation came at an area of demand, maybe came at a key level in your higher time frame. So it's always important to understand what's happening in your higher time frame so that you can make better decisions. But I do not see anything wrong with, you know, closing your trades on a daily, depending on your trading plan. Right now, for those people who might say, because it does happen, right? Remember, there is no 100%. There's no strategy that is 100% in the market, right? So what you can do is, if you know you don't really have much confidence in holding your trades, is if you do take a trade and the trade does move in your direction and you can identify a peak formation, what you can do is, let's say you open the trade and it was one lot, right? What you can do is you can take some partials, right? Close 0.50 lots on that trade, and then protect your profits, let your trades run risk-free. And the next day, what you'd be looking for in this instance, if you're looking for a sell, is you'd be looking for the dealer to give us an aging session range, and of course some manipulation, and then lock in the high of the day and continue dropping the next day. Assuming this was level 1, we would anticipate another level of drop being level 2. Right, so we're going to take it to the charts, and I'll explain the reason why I held this trade and how this video can actually help you make better decisions as you trade the market maker cycle. All right, so jumping straight into the charts, this is USD CAD in the daily time frame, right? And as you can see, what's happening here was very simple. Price was ebbing and flowing in an up phase, right? But remember, since this is the daily time frame, we don't really want to focus on a lot of history. We want to focus more on recent price action. So what I identified on this was the market did give us a higher high, but as the market gave us the high high, and when the market came back to this supply area being our sell zone, as you can see, this yellow highlighted area, the market failed to give us a higher high, right? So that can be an indication of the market changing the direction, right? So as you can see, this is basically what we had right here. Our supply area was at this area. I'm going to take it down to the PTMM view so you can understand the reason why I was actually looking for sells on this, right? Remember, I spoke about the market structure. There was no new higher high, so we had a higher high missing. That should tell you something. All right, so just by zooming in on this H1 time frame and counting our levels, we can identify we had a peak formation right here. We also had a move, right, a long sustained run into a consolidation, another move to the upside into a consolidation, and the last push, right? The last push driving us into that supply zone, right? So if we take it down to the daily time frame again, you can understand that we had 3 days of rise, 1, 2, 3, tapping into the supply area, which was a very clean zone for us. As you can see, we had the supply area with a nice bearish engulfing and some imbalance at that area. So this was something that I was actually expecting to happen as price pushed into the supply area. So we can identify 3 levels of push to the upside, and as you can see, we took our trade at this area. Let me just refresh it for you guys. As you can see, if I can zoom in, we took the trade roundabout at this area. So that was when price dropped, right, moving at this 200 EMA, pulling back, and that is when we jumped into the trade. Right, so I was just taking you through the clean chart so you can understand where I was coming with this. So if we take it to the PTMM view, this is what we can build off this trading idea. Right, so we had the peak formation already set, confirmed. We can also identify 3 levels of move to the upside, right, completing the market maker cycle. Right, so if we take it down to the H1, this is what we can see, right? Remember, price pushed down, right, to this 200 EMA, right, and then gave us a very good setup, right, which was an ID 50 or a trap above the 50 EMA. The 50 EMA is this light blue moving average right here. This is an EMA, exponential moving average. Right, and at the same area, which gave me more, gave it more confluence that this was definitely heading downwards, we also had a supply area at the same zone. Right, so as you can see, our trade was a bit late, right, but our risk was reduced. Now the question the subscriber asked was, why did I not take profits when this happened? Right, so I'm going to take it down to the M15 and explain the reasons why I held this trade. So basically the setup was at this high of the day, right, which we actually entered somewhere at this area, I think just after the close below the 13 EMA, right? So there's nothing wrong in taking profit if that's what your trading plan is, but I wasn't planning to do that, as I understood what was happening in the higher time frame. Right, price was moving up, moving away from a supply area, right, and price had already given us 3 levels of push to the upside into a order block, right, into an order block. So I was definitely looking to hold for more than 1 or 2 to 3 days, as I wanted this to go the other direction, right, because something that you can see that is right in front of your eyes is we've got a multi-week M formation, as you can see, this being the first leg. Right, we did have an immediate first leg, second leg there, but as you can see, this just took time. So this took 1, 2, 3, 4. This took a month for this peak formation to set up. So that's one of the reasons why I was not going to hold this for 1 day, because I knew this was going to give us very good pips. All right, so I held the trade, and as you can see, what happened the next day is something that we can actually anticipate. Right, the dealer did the same thing, that would want to see him do. Gave us an accumulation area, trapped people. The trap wasn't that crazy, just a mild trap, right? And then the dealer didn't really give us a drop on this day, obviously because of things like fractional disparity, just a range day basically. But this is something I want you to see the next day. This is what the dealer did, right? As he was still within that range, right, he still then went and attempted trapping above the 200 EMA. So this is basically the same setup that we had on this day. Trap above 200. This is what we had on this day. Trap above the 200 as well. And this was on Friday. And as you can see, this moved for 100 pips. So I held this trade from this area all the way down here. And we bagged over 140 something pips. Right. So you just need to make sure that you structure a strategy or formulate a strategy around how you're going to take your profits, what your targets are, what your daily targets are, what your weekly targets are. Because if you do not have such in place, it'll cause you to have your emotions all over the place, right? And it will definitely show on your trading history, right? So that's one of the reasons why you should understand your bigger time frames, understand the level counts in your higher time frames, so that it will be easy for you to scale down to smaller time frame, refine your entries, and also manage your trades in the right manner. Right, so yes, that was one of the trades. That was USD CAD, and we also gave out a free signal on CAD CHF. Those part of the free Telegram channel. I hope you guys took advantage of that one. Right, so moving along, we took a trade today. Actually, we sent out a trade on Euro NZD. As you can see, in the H4 time frame, we just had our stop just slightly above that high of the day, which is today. But this trade didn't go well, as it actually went and hit our SL. Right, so that doesn't matter. It happens, right? As I said, there is no 100% strategy out there, no holy grail. That's okay. So we also sent GBP CAD. So I took a trade on GBP CAD. As you can see, very simple. I'm going to take you to the charts right now and show you what's happening. Very simple. I identified a peak formation. I already see 1 week of drop, right? Trapping below and then pulling back into a consolidation. But what was more interesting for me on this one was this pin above the 13 EMA in the H4, which as I go to the shorter time frames like your H1, which is actually an ID50. But we'll go check it out right now. So definitely this trade definitely did recover that mini scratch that we had on Euro NZD. So this is what is happening on GBP CAD right now. As you can see, the trade is in profit. Remember what I said, in the H4 The 13 EMA basically is the 50 EMA in your H1 time frame. So this is basically what happened. Looking at today's setup, as you can see what happened, the dealer gave us, you know, that consolidation. And remember, yesterday was Monday, so nothing really happened, but you know, something that we would expect happened, right? Trap both sides. In this case, that's what he did. Trap the bottom side, and also went and trapped the high side. As you can see, we had some liquidity lying above that area right there. As you can see, we had some relatively equal highs at that area. Nothing much really happened. As expected for Mondays, we don't really expect much of movements, but this was just a trap above the 200 EMA, and we also had an area of supply at the same area. So as you can see, going to the next day, which is basically today, we had the Asian session range, just a range, nothing much happening. And then towards the open of London, around about 9 my time, we had this move which went above the Asian session high. So as you can see, definitely liquidity was grabbed around that area, and we also had a nice pin above the 200 EMA and the 800 EMA. So as you can see, we had a drop, breaking structure, and a pullback to a supply area, right? To a supply area, and that is where we actually entered this trade. And as you can see, this trade so far, first entry is floating right about 42 pips, and then the second floating at about 33 pips in profit. And we're going to hold this all the way down to this demand area down here, and the total number of pips on that one would be 150 pips plus. All right, guys, I hope you learned something from this video. Don't forget to hit that subscribe button, leave a like, leave a comment.